Hey guys, I'm Phil Town from Rule 1 Investing, and today we are going to be talking about a topic that I've been hearing a whole bunch about in the sort of value investing community, people who invest a lot like Warren Buffett, and that is Warren Buffett's cash pile and the idea that he's preparing for a major stock market crash. So that's kind of a meme that's floating around out there. And it's not just that there's a 10% correction that we've seen over the last few months. This is something much bigger. This is like a major 30-40% drop in the market. And so here's the question. Is there truth in this? Is Buffett predicting a classic crash? Or is this a spin from kind of financial media that's got to have something to talk about? So let's dive into that. Now, before I jump into the details of this thing, I think it's worth stepping back for a moment. UNLV, University of Nevada, Las Vegas, did a study on Warren Buffett's investments, and they found out that if you bought stocks that Warren bought on the last day of the month, that it became public knowledge that he bought that stock. And then you sold that stock on the last day of the month, that it became public that he sold the stock. Over a 30-year period, they found out that you would have made 20% compounded per year. And if you saved and invested like $5,000 a year, at the end of 30 years, you'd have about $18 million. So this is the Buffett most people know. This is the Buffett most people think about. The guy who picks great stocks and buys them. And if you followed along, you'd have done really, really well. Now, the Buffett that we're seeing today is the one that people don't know about. It's sort of the flip side of that other coin. So let's look into kind of what he's doing and what I mean by that. Berkshire Hathaway announced in their 2024 annual report that their cash position is now about 48 billion. This is at the end of 2024. It's 48 billion, and their holdings of treasuries is 286 billion. So let's do the math and then add something for the last 4 months as they've been accumulating cash. And let's estimate that right now, Buffett has about $360 billion in cash in a portfolio of about 600 billion. So including the stocks that he owns. That means he's 60% in cash right now. That is a record. And all the time I've been following Buffett, I've never seen him get to that point. 2 years ago, for example, he had 167 billion in cash. I thought that was huge, and I was talking about it. But that was in a $590 billion portfolio, 28% cash. So he has doubled his cash position over the last 2 years. Now, granted, this isn't the complete picture because Berkshire has a lot of wholly owned businesses, right? But if you compare the numbers I just gave you to 2023, when Buffett had 167 billion in cash on the sideline, they are double the cash that they've ever had. So investors are worried that this cash stockpiling and portfolio reduction, this could be a real sign that Buffett is seeing something on the horizon that not everybody can see. And that thing coming is often called a black swan, or it's just simply a market crash. Now, another reason that the investors out there are concerned a bit is because we've heard that Buffett just says over and over and over again in the past year that he's been very open about stockpiling cash due to concerns about the state of the world. Now take a listen to this, you guys, from the 2024 Berkshire shareholder meeting.
But I don't mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive.
So what's going on in the world right now? Resetting the rules of world trade. That's fairly major. Massive money printing, not just in the United States, but worldwide. Inflation, companies shifting production out of China, China threatening Taiwan, Gaza blows up, Ukraine continuing, the rising cost of living, mortgage rates at levels people haven't seen in multiple decades, fear gauges like Bitcoin and gold through the roof. So there's a lot out there to be worried about. And with Buffett making comments like saying, these economic issues make him, quote, more than happy to build the cash position, a lot of rulers are basically taking this to mean that Warren is hinting or literally nearly literally saying that we might be in for a major market crash and major rocky times ahead. All right, so with that kind of stuff in mind, we've got Warren sitting there with 60% cash, all right? Is this because he knows the market's gonna crash? That's not what's going on. Not even close. Stacking up cash for a Rule 1 investor happens when the market becomes too expensive. It's a natural consequence, and that's what's happening now. When the market's too expensive, what happens is it's time to sell. Remember, the secret to great investing returns that Warren talks about for the last 60 years is to buy when the market's fearful and sell when the market's greedy. It's not that he's timing the market. What he's doing is he's applying the same strategy as ever. It's just that in current conditions, that strategy led to selling Apple and Bank of America, two businesses that have become massively overpriced. The result is a buildup of cash. It's a natural result. So let me say again, this is not trying to time the market. This is not saying the market's going to go down. It's just a consequence of good Rule 1 investing. Now, is the market expensive right now? Yeah, at 27 times earnings, maybe almost double the last 140-year average. Yeah, and the Wilshire GDP at 177%, and the Schiller running double the 140-year average. And what about where it was in 1929 and 1999? Right where it is now. So yeah, it looks like this would be a great time to get out if you're into predicting markets. The only problem with that is that it's been looking just like that, a great time to get out, off and on, since about 2017. So this is like, we are, 8 years down the road of this looks like a really good time to get out of the market. The Schiller's through the roof, right? The Wilshire's off the chart. We got high PE ratios. Man, I mean, that's all the way back to when Warren started warning us in the 2016 annual report that he did in 2017. Every 10 years or so, we get an economic storm that rains gold. And since then, vast amount of money have been printed, interest rates slashed, massive debt piled up. All of this just jacking up the price of assets. It didn't matter that they were already crazily high. So trying to time any market requires a crystal ball that we don't have, and Warren doesn't have it either. But a market being manipulated by an all-powerful government is completely unpredictable, and it remains unpredictable today. So Warren doesn't know where this market's going any more than I do. What he does know is that certain companies that he owns got very, very pricey, and by the rules of Rule 1 investing, that's the time to sell them into the greed. The rule is simple. When a company is vastly overpriced in a greedy market, sell it. Now, Apple, for instance, has been in the red zone. That's the sell zone, off and on since 2022. But in 2024, it went up so far that on my charts, it went out above the red zone into the sell me right now zone. And Buffett sold off most of it. But selling into a greedy market, you guys, is just one side of the Rule 1 strategy that has Warren sitting on $360 billion in cash. The other side of this is that Warren simply isn't finding great opportunities to put that cash to work at a margin of safety price. So naturally, he isn't deploying large amounts of money into this market. Instead, he's keeping the money in U.S. Treasuries where he can still earn a modest 4% or so. And he's actually been telling us about this predicament for quite a while. In his 2019 annual shareholder letter, he said, in the years ahead, we hope to move much of our excess liquidity into businesses that Berkshire will permanently own. The immediate prospects for that, however, are not good. Prices are sky high for businesses possessing decent long-term prospects. This is 6 years ago. And last year at the Berkshire shareholder meeting, he told us this.
We only swing at pitches we like, and it's just that things aren't attractive. And well, there are certain ways that can change, and we'll see whether they do.
Now, we should be thinking exactly the same way. What do you own that's vastly overpriced? Do you own the index at a 27 PE ratio and you get a 34 Schiller? And maybe you should think WWWBD. What would Warren Buffett do? What would he do with what you own? If Warren Buffett would look at what you own, what would he advise you to do? And there's one way that Buffett is different from us, okay? One really important way. Unlike you and I, who can invest in virtually any company on the planet because we're so small, for Buffett and Berkshire, there are only a very small number of companies in the world that could even move the needle at Berkshire. Buffett faces a much tougher challenge than the rest of us. I mean, that's why he can do this and is a genius. He needs to be a genius to be able to manage that much money. He doesn't just need opportunities like we need. He needs opportunities specifically in the 100 largest companies in the world. We know that Buffett likes to keep his ownership percentage at, a little bit under 10% for regulatory reasons. Well, if he were trying to get $10 billion of the $360 billion into the market, 10 billion, so like 4%, 3%. If he's trying to get that into the market and stay under 10% ownership, the company he's buying would need to have a market cap of at least $100 billion. 100 billion. America has 5,500 publicly traded companies, and of those, only 100 have market caps over 100 billion. So this challenge for Buffett is twofold, man. He needs not only a period where prices go lower because of some black swan, but he also needs an event that will hit the select few ultra large companies in the world that sit inside his circle of competence. I mean, talk about a narrow window that he's got to shoot through. And that's why the last year's annual letter, Buffett said, there remain only a handful of companies in this country capable of truly moving the needle at Berkshire, and they have been endlessly picked over by us and by others. Some we can value, some we can't. And if we can, they have to be attractively priced. Outside the US, there are essentially no candidates that have meaningful options for capital deployment at Berkshire. All in all, we have no possibility of eye-popping performance. So that's a really major handicap. So let's go back to the original question. Is Warren Buffett predicting a stock market crash? No way. He's not predicting one. He's simply being fearful when others are greedy, selling into this irrationally exuberant market of companies that are overpriced in his portfolio, building up the watch list ready to pull the trigger, and ensuring he's got that pile of cash ready and waiting for that inevitable time when stock market prices take a turn for the worse. Every decade or so, dark clouds will fill the economic skies and they will briefly rain gold. And when downpours of that sort occur, it's imperative that we rush outdoors carrying wash tubs, not teaspoons. So do you have your wash tub ready? Or are you still holding vastly overpriced stocks and hoping they'll go up even higher? So let me know down in the comments section below. And also, before I sign off, I do want to let you guys know that if you feel you're ready to take that kind of next step into learning rule number 1 strategy from me and my team, we would love to see you at our next workshop. I teach for 3 days entirely online. We go through everything you need to know to become a Rule 1 investor like Warren and Charlie and me. We have over 25,000 graduates who will tell you that this is simply the best investing education in the world. And we have a net promoter scores that prove it, averaging 82, far better than Harvard or Yale MBA programs. So please check out the links in the description and pinned comment to learn more. I'd love to see you guys there. So apart from that, thanks for watching. Now go play.